basics on the ASX webinar, and it's going to be a straight voiceover for the time being. And I'd like to find out a little bit about you and what you're doing and the way you do things. And I'd like to find out at the moment how many of you are I'd like to find out how many of you are, where are we, investors, traders, just starting out. Is this your first time ever in a David Hunt webinar? Is this, am I a totally foreign entity here with you? Have you done anything with me before? And do you understand what I'm talking about? Are you perplexed as to what you're doing in trading? And have you seen me on television? So, there is no first time in a webinar, and 53%, 55% are investors, and 47% are traders. 15% are just starting out, and 38% are Fibonacci number, experience for 2 or 3 years. So that's pretty cool. Thank you for answering those things. That tells me a few things. If I had asked the same question 2 years ago, I would have actually seen most people saying that they were traders. Not many people were investors. This is something that I've noticed over the past, must be about last 6 to 8 months, people telling me that they're actually investors now. And most people were traders at webinars previously, 2 years ago, 3 years ago, 4 years ago. Okay, we can see you, not your screen. You need to use a Mac. Joanna, I don't know, I don't think I can do that long. I just can't do a Mac. I did a Mac and they used to give me extreme grief. Extreme grief. So, and you're saying there is no volume here? I think the sound is quite good on this particular one at the moment. So, okay, so thank you for answering those questions. 55% investors, 48% traders. There's a bit of an overlap, and 12% just starting out. Now, what I tend to do is I tend to attract people who are getting out there in the markets and have been out there for a while. So for beginners, sometimes there's a little bit of jargon. If you need help with the jargon, it's probably best to ask. On the Profit Hunters website, there is an FAQ, and it talks about the jargon. I'll try and keep it a bit jargonless at the moment, and we'll work it for there. So I've got another question which is useful for me and maybe useful for you. I'd like to know what your opinion of the market is at the moment. Are you bullish, bearish, or neutral? A neutral would be a don't know position. Are you coming from a position of not knowing what's going on in the markets? And at the moment, 17% of people are bullish, 40% of people are bearish, and 43% are neutral. And for those people who haven't voted, I'd really appreciate it if you did take the time to vote that. We've got about there's probably another about 20 or 30 of you that are either not paying attention or really are working with not working working not on getting it right. And forgive me, I've got my computer up here now, and we'll probably see my webcam there. And yeah, okay. So when we're doing these statistics, this is a poll of different. This is a poll of different traders and investors, and coming up from different markets. And the way we do things is when we have a group of people together, it makes sense to find out whether they're bullish or bearish. And what that means is if everybody's really bullish, then it's more likely that the market is overcooked. And if everybody's really bearish, then it's more likely that the market is overcooked on the downside and ready for a bounce. And at the moment, 37% of people are bearish, 18% are bullish, and 46% are neutral. So when I'm looking at what goes on in the television, and when people are actually turning around and giving me advice, and they're all saying one thing and they're very strong on it, I get concerned. And I guess I got pretty concerned the time that I talked about when I emailed out to everybody about this webinar, is that this gentleman was just incredibly bullish. He congratulated me, and he said I was the reason that he made a lot of money because he saw my report in the Financial Review on the 28th of February 2009 that you should be buying the stock market. And from there, he actually committed for the first time, really, it seems like in his investing career, committedly aggressive to putting investments in. I am going to turn my back on you, so I'll close this webcam down because it does look like my other computer, which is my much more useful computer, is getting going. And so the gentleman was really keen to know my view about what the market was doing. And he was incredibly bullish, and he really couldn't listen to me. And I think at that time, possibly his ego was getting in the way of his approach to the markets. So one thing that I do know, as soon as I'm being too proud of anything, something bad's going to happen. And certainly I was wondering whether that was a point. At that time, I'd just been speaking with on Sky Business with Tony Lecantro, who's a fundamentalist and a stock picker, and I suspect he was a stockbroker at some stage. And so here's and we both stood up. We both were asked, "What do you think of the market?" And we say, "I wouldn't be buying it here." And Tony was, "I think it's toppish." That was actually, I think, around about the 2nd of September when the market topped. It topped on the 3rd. And I was taken aback when Tony said that, because, you know, normally you'd expect the people who are more into fundamentalists and stuff like that. He was a stock picker, and he said, "Look, I'm just picking the stocks, but the overall market's wrong." So he was very right, and I appreciate his approach when he talked about that. He was just simply stating the fact that this market was just in the wrong place. And we're going to have a look tonight at what is going on in the markets. So you're seeing the last poll, Bernie. Yep, I can appreciate that. I'm actually stalling for time. I'm trying to get my other computer back up and running. It takes a while to get up. It's a bit of a lumbering giant, this one, and you can probably, if you want to be entertained, you can see the side of my head, but I don't think anyone needs to see that particularly much. Unless, let me know if you want to see the side of my head and possibly my bald spot. You're going to get an opportunity, and it's a big one, to see where my bald spot was not when I actually had hair tonight, and hair on the back of the head. So it's hopefully this is picking it up. So what I'm saying to you is that the fact that the market pulled, thanks Bernie, that the market actually has pulled back, and I'm very grateful it has. We've had the markets that are being supported by cheap money doing very well, like the Nikkei. It has a low dollar yen, a low yen against the US dollar. The other markets that have been doing well have been the US markets. And I had a theory that Alibaba might be the top of the market. They could hold it up for a while. I also had a theory that 2000 would be a problem and that the S&P 500 could make 2017. Quite a number of these things came true. And the US market has really got into a topping area and pulled back a bit. In fact, today it's breaking down, or it was breaking down when I was preparing the webinar. I turned off the markets a bit so I could talk with you more and prepare more for this. And my computer is slow. It is coming up, believe it or not. You can hear it. You can probably hear it in the background, and just picking up things. And I'll be in there shortly, so I'll be with you. And apologies for the wonderful things about technology. I do, as I said, really hurt my computers a lot. This is a big grunty machine with something like 32 gigabyte of RAM, and it still doesn't help me sometimes. Okay, coming into the other webinar. So I'd like to hear from you a bit about your trading. How have you been going in your investing? Who here has taken their first investment ever this year? Please type that into the question box there that you've got there. There's a little box on the side there, so you can raise your hand. It's probably better if you type it in the question. Has anybody taken? No, so there's nobody here who's taken their first stock. Who here has had counselling from their broker not to buy any more shares? Please raise your hands. Out of most of the shares at the month and have been out for a month. That's great, David. Well done. I've found a lot of people have moved simply into being in property. And the problem with property is if you take most of your superannuation fund and put it into an investment in a share, you can sell out of it. You can sell out of it really easily out of a stock market. If you've invested in a property, say for example a unit that's getting a low return, first off you've got to deal with tenants. Secondly, you have to deal with decay and getting things fixed up. And thirdly, one of the things that hey, I'm alive. And thirdly, the government's at your back and they want land tax off you and all these sort of things. So yes, there are capital growth aspects in buying a property, but the big thing I'm going to tell you, and you probably already know this, but if you are invested in a property and you try and sell it, it takes you at least six weeks before you can actually put it on the market, sell it, and get out. And there's all this sort of drama around it. So property, I think, is going to be the next big disaster in the market. You're probably hearing me twice, so
I'll be quiet on this side. So thanks everybody for bearing with me on that front. I appreciate your patience with me while I'm doing this. And the webinar is just coming up now for me on the computer, and I think it'll be okay soon. So, thank you for waiting for the, okay, where are we? So it's showing all right. Okay. Okay, so getting back to basics. I hope my sound is working well. Please raise your hand or please tell me if it's working well. That's my lovely wife Azad and me. She's always been asked, is he retired? No, he's just been currency trading for 30 years, and that tends to actually make you look a little bit washed out. So here's the sign, and hopefully you can hear me. Everyone can hear me. Sounds good. Okay, fantastic. Okay, so my whole approach to life is picking the trends in the markets. And how to interact, you've already had a crash course test in that one, and you've all passed. So I've asked you how many of you are starting out, and there were a few people there who were just starting out in the market, and about 12 out of the number of the people in here. And congratulations to you. It's actually a good time to be starting. I'd rather you were starting now as the market's coming back into a value area, and we'll have a look at that tonight. And I'd rather you be starting not at the top of the market. So congratulations in coming in and getting in there in the right time. And it feels better when you start off when the market is troubled, and is more profitable starting off when the market's troubled, because you'll learn better. A little bit about me. I worked for Qantas, AUSSAT, which was Australia's largest satellite company. At AUSSAT, I had the pleasure and pain in trading currencies. That was the first thing that I did. I've been trading since I was 20 when I first bought shares. In 1982, I was introduced to currencies and corporate treasury. 1983, the Aussie dollar floated, and then we basically saw the market do really nice things for the rest of that time. For the rest of my career at AUSSAT, I managed to make a good amount of money at AUSSAT and give away $10 million of it in 6 months. That was an unpleasant experience. In Qantas, I learned the word, don't worry, it will come back, as being one of the worst words in the world. If you ever say that, you're in trouble. At Macquarie Bank, I was able to trade whatever markets I wanted, trade anything I liked on the bank's money. I had a lot of fun. I really enjoyed that. In fact, I spent most of the time looking after my kids because I trade better when I'm relaxed, and I'm sure you probably will too. Here's a bit of history, and I hope Dawn's in the audience. I'll just see if you are, Dawn. I hope you're in. Maybe, yes, she is. Hi, Dawn. Now this is Bryce Gilmore, and Bryce Gilmore is a special mentor to me. He's the Australian creator of the Wave Trader. And if you've heard of a gentleman called Larry Pesavento told me that he makes money every time he trades with Bryce. Now Bryce is now basically retired. He's had problems with his eyes, but he created one of the best softwares that I've ever had the privilege to use, a thing called Wave Trader. And what it does is it works out market cycles. And we have some pretty famous people in the audience. This was the late Meryl Armstrong, and she was the editor of Trendex. This is 1992 at the council room at the Mitchell Library. Forgive me, I've got a bit of flu. And this is Dawn Bolton-Smith sitting there. Dawn, just wave your hand if you. and over here we've got the late Zoran Geyer. Both Meryl and Zoran are no longer with us. And look at the hairdos there. This is over here was a gentleman, and he was actually a very good trader. He used to trade through Macquarie Bank. it was also managing people's money. And I'd love to know who this young dude is with a beer in his hand. That's unusual, and actually hair on the back of his head. So I like that. I like that photo. I don't know if you've got those sort of photos in your life, but there was about 35 people meeting in the ATAA tech again, yes, again. And he's also skinny too, so it's how I feel anyway. I'm not that fat, so about 85 kilos. Anyway, it's nice to see that I did have not grey and yeah, and some hair. Anyway, this gentleman over here was the son of Zoran Guy. In the global financial crisis, he lost his job. He had no money. He had been a trader, and he traded well, and then he lost it all. And then I spent 2 years, I think it felt like 2 years. He lobbed down to my place at Melbourne, and I tried to look after him for quite a while. And I learnt the reason why you don't help people, because you can't get rid of them. Anyway, I felt sorry for him because he was Zoran's dad. Zoran was his dad. Zoran, you may have learnt with him. He was a very opinionated man, so I understood why Joel wasn't quite had some strange habits and stuff. Anyway, looking at trying to support somebody for a couple of years was not healthy. This is me with Russell Sands. He's a turtle trader. He taught me money management. He's actually a good friend of mine, and what he's done over the years, learned from Richard Dennis in Market Wizards, and he's original turtle trader from the experiment back in the early 80s. He started off as a blackjack player and got in college, and then became a very good futures trader and learned money management from him. This is me with Lindsay and James. These guys now tower all over the top of me, and they're getting me back for calling them shrimpy guys. So what we're here to do is talk about getting back to basics, and hopefully I'll get you off my web camera. And getting back to basics, this is important. At the top of every market, we lose sight of what reality is. And I must say, for me, having the position that since October last year, where I was saying constantly, don't get too excited about this market. Occasionally we bought some things at the bottom of the range and then got in, and we're trying to work that. But to hold a view that this market is expensive for basically the better part of 8 to 10 months is very difficult. I don't know if you found that, and certainly we're working with cycles that were being distorted by the Federal Reserve's easy money, and whether we liked it or not, the Australian market was being distorted by that as well. So what are these basics we talked about? And when I was in the council room at the ATAA and learning from these people, and you know, I was 32 at that stage, and I'd been learning trading really intensely since the age of 25 when I started off really trading currencies. What I learned at the start was to trade with the trend, and everyone bangs on with the trading with the trend. My other mentor, Larry Williams, he said trend is the basis of all profits. Now, I thought that was interesting because Larry was, in my mind and a lot of people's mind, a very short-term trader. When he was arrested for tax issues with the IRS, and he eventually got over that. He was in Australia for 2 years on bail, and then went back to the US and faced the charges. I had to open up his trading accounts and his computers, and he was trading very well on long-term positions as well. Trade with the trend. Trend is the basis of profits. Larry was a classic example. He would trade live in front of people at his $1 Million Challenge seminars, which I arranged 5 or 6 in Australia and Singapore and Malaysia. And he would short-term trade. He knew how to take profit, and he knew how to trade with a trend. A very good all-round trader. So The basics are what goes up must come back a bit. It doesn't have to come back all the way, but there are certain times when it will come back a lot. We really have in our arsenal things that say this market is overbought, this market is oversold, there are too many people interested in this stock market, and when we're trading and especially when we're investing, we want to get in for the better price. So we've got to use, when it does pull back, the times it does pull back, we've got to pull it in, pull our heads in and wait for the pullback. There's a thing called 3 drives to a top. Now, this is not explicitly talked about in Elliott Wave. It was talked to me by Ray Barros basically in the early 90s, mid 90s, and up to about 2003, I was involved with Ray. 3 drives to a top. What that means is when the market's had 1, 2, 3. That next movement onto the third time, you're looking for a failure in the market, and then failure is an option. So 3 drives to a top is an important thing to look for when you're looking in terms of market structure. And we'll get to talk about that a little bit later on. Now, divergence, you look for things like RSI, MACD, stochastics, things that are called indicators will generally give you divergence readings. And momentum, and another one of my mentors and people I've brought to Australia, Jake Bernstein, he really loves the momentum model. The other thing that we hear time and time again is don't fight the Fed. Why is the US market backing off so much now? Is it because of war? Maybe. You can never be sure what the rationale. Is it because Alibaba's finished and they've managed to hold it up and get everybody paid out and floated off? The Shanghai A-shares index was rallied into that. The US stock market rallied into that. Often there's a negative relationship between the Shanghai A-shares index, the Chinese stock market, and the New York Stock Exchange, the Dow. The don't fight the Fed, this Federal Reserve starting to reduce its monetary accommodation while keeping short-term interest rates low, but not buying as many bonds in the long end. So the thing that everybody would say, don't fight the Fed, is coming off the boil at a big number of 2,000. My target was first off 2010, which reached, and then it backed off, and then my next target was 2017 in the S&P 500, which it reached and then backed off hard. So don't fight the Fed is the basics that we can now start to put to the past. Or put to the past, that's probably a better way to put it for you. Now, what is this? This is the share price index futures chart. And I want to show you a few things here, and hopefully this will work. This is what's called a creeping trend. And in my training with a Chicago trader, he traded soybeans and T-bonds on the Chicago Board of Trade, and he had a floor trader, and he called down his orders to the Chicago Board of Trade. He taught McGann, a very good, very, very smart man. You've never heard of him, but he taught me a lot about market cycles. Now, we watch this, and this is called a creeping trend. And this creeping trend is where the market's going up, it comes back down, it goes up, comes back down, washes down, washes down, washes down. And it's this creeper, it's called the creeper, he called it. And we get this big movement down. Notice that this retracement was a nice washout to here, and then it started up in what we call a trend. So basically this was never looking back. Now when we just look at what the share price index futures, and for those people who are beginners, the share price index futures are the equivalent of futures or derivatives on the XJO, the ASX 200 index. So they're like they're the top 200 stocks, and it tends to track that, give or take 20 or 30 points in a time. So this is a trend. Now, you might call this movement down here a trend also, and we'll go with the pen here. Might call this movement here down a trend, and it was certainly probably the best trading I've ever done in my own personal account. I picked the market should top here, and by about this time I realized that this was a really big collapse that was coming, and on this retest I realized that this was a really big retest and got short. Now this big movement down here was the easiest thing in the world to trade because it was just straight down. It was a downtrend as well. Notice here that this time period in the creeper took almost the same amount of time, and we could probably study this. We could see that this took about the same amount of time. Notice how fast this was on the downside, and notice over here when we go to our next market, which is the counter trend, which when we go to the counter trend, we can see that we have this pick up here. Now most of you will know that I picked that top in the financial review. That was lovely, and watched it collapse. But most of you will realize that this movement here is different to this movement down and this movement up. And what is the difference? What's the difference between these two? You can take some guesses. I'm happy to take some guesses. Okay. No guesses? Okay. Well, is this a creeper? The symmetry. Yeah, Rowan, not bad. Not bad. That's pretty good. Okay, so what we're seeing here is it took us from 2003 to 2007, which is 4 years. And I'm sorry for the typing in. It's 4 years of this time. And from 2009 to 2014 is 5 years. It's actually taking a bit longer for this. It's taken 5 years. And notice here, you might be dealing with this little creeper pattern. We might be in a creeper pattern. These patterns look different on a chart. When you draw them on a physical chart, as Dawn Bolton Smith will tell you, the creeper could look like this. This could look like a creeper on a physical chart. But these things, when we were over here, this top wasn't here, so this didn't look quite like a creeper. It looked like a stronger trend. So the markets are here to fool us a lot of the time. And the fooling part is that every time we look at something, we have our hopes and dreams embedded in that chart. And I've been looking at this expanding triangle and thinking it's been a problem. And we can see here, we can see an ABC to the downside. We see all of the things that I teach in the Elliott Wave things. But this is overall, it's taken 5 years to correct only about 70% or 66% of this entire global financial crisis move. And whereas it took 4 years to go up, it's taken 5 years to go up this time. So this is highly likely to be an ABC pattern, and it's confirmed if it breaks below 5,000. What that means is you have to be a lot more cautious about the way you approach the stock market these days, and more sensible about it, and actually take trades that are less risky, particularly as the Federal Reserve stops putting easy cash in. We do have a couple of other central banks out in the world that are still trying to pump money into their systems. The Bank of Japan and also European Central Bank are trying to do that. But the fact that it's taken 5 years to make this move up, that is struggling. Now I want to turn to, this is a Profit Hunter Group Gold member. He was a Sergeant Major in the Australian Army, and that's him, I believe that's when he was in Timor. And is Mr. B, we call him now. He used to be Sergeant Major. Now he's Mr. B. And he talked about here his LNG, which is a little stock you might have heard about now. It's just made it into the ASX 200. He said, I read it with great interest your response to yesterday's question. I've got a question of my own about LNG. An excellent call, by the way, by me. He's talking about me as a PhD member. He gets to ask me about these questions. I've been banging on about LNG since 2005. My old man is happy. He's made approximately 700,000 profit on LNG. Me about 30,000 K, so I'm stoked also. Well done. Anyway, Guru, I get asked that. I get that word quite a bit from my members. As a non-member, you probably don't understand what I do and the way I do things. I don't have the, well, I have a dream one day to be as good at presenting myself in the public as some other people. I don't think I'll ever get to that stage. I spend a lot of my time in this office or at the beach having a swim or a surf. I don't really go out that much in the rest of the world. If I'm out, it's usually at dinner with my wife or going to the movies or seeing some friends. But I don't go out and hobnob with the financial markets very much, and I'm not talking to journalists all the time. Occasionally, John Wasiliev will send me an email and say, what do you think? So, my projected target was $4.55, and he wrote this on the 16th of September. And he said, do you have any projected targets past $4.55, especially as this project progresses? He thinks with some projections, not mine, out to $7 or more. And he's taken the initial investment and letting this ride. Now, this is a gentleman who's made $1 million trading stocks. I'll repeat that. He's made $1 million trading stocks. When he came to me, he was losing money, and I turned him around. He had lost $400,000 trading stocks. And I turned him around. I do that a lot. If you are losing money, I can turn you around most of the time if you're prepared to listen. At least get you to stop losing money. So let's talk about Mr. B's fabulous trade with PHG and LNG. Now, this is a monthly chart of LNG, and what we can see here is that it really had a high level between $1.80, that sort of area, as a previous top, and it had been bouncing around the bottom and been down to around about 20 cents where it started off from here. We'd actually had a couple of good goes, and some of you will remember the emails around that time where we bought it down on, I think we bought it on this low here as it broke out, and we had a fantastic run in it, and it went up to 40 cents. And then we had another pullback, and we got long this, and we started trading it pretty aggressively, and we had some fantastic moves. And some of you will remember my calls on Your Money, Your Call around this $1.20 area, $1.80 area, and I was calling it well higher into those. This is a case of it spent so much time doing nothing, and then it took off. Why did it take off? Well, it started to produce stuff and get money in. Let's go over and have a look at its actual daily charts and weekly charts, and we'll congest down. And what I want to show you is the basics that I look at, and we'll look at the board chart first, and then I'll put on some indicators and some other things. And hopefully we'll have everything that we need here. It looks like it's causing itself some trouble here. And it says trying. One moment, I need to go and, here we go. For some reason the internet, I've got Big Pond, no, I've got Telstra cable and Optus cable, and sometimes it's a little bit slow. So this is the monthly chart that you just saw effectively. Let's drop down to the weekly chart. And also let's put on a volume. One of the things that I would like you all to do, particularly if you are investing or trading, is to look at the volume in the market. That gives me a huge tip off as to what the market's doing. There is also something here which I can do, and that is to turn the chart into a log scale, and that takes away a lot of the excitement factor. Notice here, $4.55 was not the exact high. The target that I gave, I believe that was back over around about here, August sometime. I gave $4.55 as a target. $4.49 was the top, so I didn't get that exactly. Now let's look at this chart here. We see an impulsive move up which has got a bit of volume in it. When you look down, these volume bars are going up a bit. We then see a knockdown on heavy volume down into this zone. And I'm trying to bring it up so can everyone see this chart clearly? I'll get rid of my webcam so we can, that might blow it up a bit. So we see that it breaks out, it comes up here, it has a fantastic movement, a long time in correction. This was a very long time in correction, and it came back down to a nice little area that I normally look for. And I don't know what the retracement was. I think it was a retracement because we started to get interested around this level, and we got a good run up from this to be on that one. Now, notice the way that the next time it started up on this low, volume started to pick up for the next bar. It shot up on this side, and it starts, every time it moves up, it's moving up on higher volume. It declined on a bit of a shock here, and then spent another period of reaccumulation. So this is accumulation, this is reaccumulation, and then the volume started to kick in on the top side each time, and then here the volume was on. Now, it's been going and been put into the top 200 stocks. When that happens, fund managers buy it who have been ignoring it. If you look at the example of ALS, which is ALQ, the stock ALQ, you might notice that ALQ got put into the top 200 around this period in 2013. I don't think it was this time. Somebody can quote me on it. It was one of these two tops. I believe it was this top. It got put in, and then from there on it had the kiss of death. And at the moment it's one of my unfavoured stocks. It used to be one of the best stocks for trending that you'd ever see in its previous guise as Campbell Brothers. This was one of the most trending consistent stocks that you have seen. But notice what happens when it's in trouble. Its volume is breaking down. I didn't put it on the schedule, but watch the volume. Please watch the volume. Highly important. You've got volume going on the downside. That's a real tip-off that it's going down further. Now, where can this go to? We won't talk about that so much. Let's drop on some simple moving averages. And what I want you to do is to just understand this is going up and this is going down up until this point over here, really just here at the $8 breakdown. You could say that it was still in a range for quite some time, but now the volume's breaking hard on the downside. You can see it at least down to $5. And let's pick this up, style templates. Preferred. And very interesting. We may have seen a little low. We have had targets to 542. We see volume. We may be in the area in the next, basically we could have seen it at 560, the low of 542, for a rally back up to $7.01. That's something to put that. I think we'll certainly have a look at this for PHG members tomorrow morning and look for a buy and where we can track it down. But we only have the expectation up to $7.12 or $7.01 or $7.05. In somewhere in that zone is where I would expect it to get to. I would find it hard to see it going much above there in a hurry. And we see here also, so maybe 542, that might be the area. It's had a dramatic knock this week. And let's have a look on the dailies. We can see the dailies is oversold. It's had two drives to a low, and it hasn't got any divergence yet. So at the moment, your first rally would be to 622, your second 644. Now I'm looking at what I was taught by Bryce Gilmore, what I was taught by Glenn Neely, and what I learned from other people in Rob Prechter's books and things like that. So at the moment, this is a strong impulsive move down. The only thing I can see at best is a correction, and so up towards $7.10 would be about the maximum that I would expect on these rallies. It is in the area where you can take some buys with stop loss below $5.10, and it has become overbought. When you're looking at the ADX and you see, it's become oversold, and I won't explain the ADX. I've done that in previous webinars, and I think most people understand it fairly well. So this is a stock. Once it starts to show this pattern, and this pattern here was a descending triangle. This is something a little bit further that I didn't want it, wasn't going to go, and it's a little bit of a bonus. See that descending triangle? If you can see a pattern that looks like that with bottoms that are straight and coming down, and tops that are gently coming down in an almost perfect angle where they keep on hitting, and this one's fairly straight and it breaks down, then you can expect at least the move between $7.25 and $8.75, so that's what, $1.50. You can expect at least the move down to about $6.25. And it went further because fundamentally there's something wrong with ALQ, because obviously the mining sector is being shot to pieces at the moment. So my basics are look at the volume, my basics are look at the trend, my basics are look at the pattern, and you'll get something out of it. So when we talked about, we go back to our friend in LNG, and I wanted to give you that example that when they move you into a different category where the fund managers are actually buying the stock, and that starts to be where you can get changes. Now, LNG, I'd been giving the target, and basically I think that it's reached enough. It's moved up enough at the moment and should have a bigger pullback. And why is that? Fundamentally, I can't tell you. What I can tell you is it's done enough, and we're seeing at the moment a bit of heavy volume as it's pulling back, and I wouldn't like it below $4.09, plus the big investors have bought into it already, and so it could come back down to as low as $2.80 to $2.60. I don't think that's a likelihood, but the best area I think would be $3.45 for LNG. And now that the big investors are in there, they all own it. They've goosed it up here, tried to get in. There was some sort of big buying frenzy on this time. I suspect that's when it went into the top 200 stocks. Some of the Brains Trust would know that better than me. I don't remember everything that happens with the stock, but I do remember a lot of its price action. So LNG we'll go back and have a look at all of the things that it was doing. LNG, when the ADX is rising, it's in an uptrend. Now you can't see this clearly here because the other price action tends to distort the chart. But when you get rid of the other price action, you can see these are really powerful moves. You were doubling your money basically from 30 to 60 cents pretty quickly in the space of about 3 weeks in LNG. Notice the volume, we've talked about that. Always look at the volume, look at the pattern, the ABC pattern to the downside. Look at this, how it couldn't break down here and then it started to break up. These are things you've got to watch for and work on and go hard. Is this making sense? Is this making sense for you? Let me know. Have you learned anything tonight so far? Have you got any questions? Volume is the driving force. If you can get volume in the markets that you're trading and investing in, you will help yourself a lot. Look at a volume chart. Okay, so a couple of people. Let's stay with the I've got a question here. When's the good time to buy in the market again? And long, I've got to say, the best time to buy is when everybody is telling you not to buy. And at the moment, it's tilting a little. Stephen is asking, is volume better than OBV? Let's put on an OBV. I tend not to use OBV. That's not to say it's bad, but it's just that I don't put it on because it's some people use it, and it was made popular. I don't know if it was created by a gentleman. I think his name was Grantham. Anyway, I don't have his name in the back of my head. Jeremy Grantham. Anyway, whatever his name was, OBV shows you here a similar picture to what volume has. Notice that it's picking up, and volume, so it's a derivative of volume. Both of these are still positive in the long run, but I'd love to see $2.82 come back in, and that's to buy. So at the moment, the trend on the monthlies is fantastic, but a really good trend can have a pullback, and it should come back down to $2.82 in a normal stabilized Elliott wave world. Volume is high there, so that's indicative of it can go higher. Your OBV still shows no change in that. Let's drop down to the weekly charts and see where it's at. And on the weekly charts, we see it's hellishly overbought on the weekly charts with an ADX at 74. That to me is a little bit of a warning sign. And we can see the volume was more of a culmination, and it's now in a bit of a struggle streak pattern. And on the weekly charts, $3.67 and $3.45 would be there. Now, Stuart is asking what stock I would use if short. I would put that at $4.66. I'd also require a slightly better entry, and we'll think about the entries and how they work. And if you wanted a tighter stop loss, $4.45 would be the stop. At the moment, I can't tell you to short that because there's not all the preconditions for a breakdown, and that's something we'll work on with PHG. When it happens, we then go and hit it. If you are running a short with a stop at 460, you probably have a 65% chance you will be stopped out at this point just because of all the preceding price action. It might go to $4.55. It may ping 460. So that 460 is the best stop that I can give you that is the tightest stop. But I'd rather see the market actually breaking properly. And this isn't broken yet there, Stuart. As I say, as it unfolds, PHG members and I will be working on it. Yeah, 395 is not another bad area as well that you could expect to get down to should it start to break down, and that would be below 420. That would be the first sign that I'd be keener. Now the next question is from Andrew. I'm going to pull up my Australian shares report here, and I'm not sure if we've got all of them there, but a couple of weeks ago you will have seen that I said do not be long the banks, and let's see if we can find this here. This is the 12th of September, and go away. I have to open it with another thing. Open with Adobe Reader. Hope you can see that. This is ANZ, and if we can see that if it breaks down below 32.50, and this was on this date was the 12th up here, the 12th of September, and I was looking for these breakdowns, and we might get $28.41. What we can see is a failure to thrive above last month's high, and that would indicate that people got excited about it and it's breaking back down. We see a failure on the weekly charts. So here I've been warning about this. Here I was warning in CBA, this is Commonwealth Bank, and in the Australian Shares Report comes out 3 times a week. I was basically saying, be careful, these banks are a problem, particularly CBA. Okay, so here's the Australian Shares Report. Apologies for that. This is the 12th of September. Kept you in suspense there, and I think I don't think I was away. They'd just come back from being away. Basically, I was warning here that there was a problem with the ASX, and I've been doing that way. As a fragment, all ordinaries index is a fragment from breaking down a little bit, and that would be below. It breaks down, then reverses. Okay, so here we get on the financials, we started to see ANZ, and I was saying here, if it can break down below 32.50 in the longer run, we might get $28.41. Can everyone see ANZ at the moment? It's the ANZ chart. And so we're getting lower targets. We see a failure on the weekly charts, and CBA, so basically weekly charts. And the Australian Shares Report is for investors. Notice here with CBA, we were looking at a trend line break. This was the weekly chart on the trend, on the weekly chart here. And weekly chart, we're looking for trend line break, a few other things. Notice over here, the momentum was out of the system. In terms of CBA, CBA was the one that I thought was the biggest problem. The best was National Australia Bank. So we can see we were prepared. We're basically prepared for this. Now, in terms of whether you're talking about the Bank of Queensland's a slightly different story. The big four banks are what we monitor every 2 days with the Australian Shares Report. Sometimes we have a look at Bank of Queensland, so it wasn't a question. But this National Australia Bank was the one that I said that it's starting to break down, but I considered that National Australia Bank was one of the best banks. Now, this is Westpac. Now, Westpac is the next best bank from NAB. The worst bank is ANZ. Sorry, the worst bank is CBA. The next worst bank is ANZ. So notice here I'm saying the Westpac is one of the stronger banks in a weakening banking sector. Now, if you are an investor or a longer-term trader, this report is invaluable. You can see that there's 34 pages in this report going through about 20 or 30 stocks, the major indices, and we cover the materials. We've been bearish for the materials index, and I've been saying the target, the trend is down for the XMJ, and it will retrace this entire range and head down towards 9,400. So I cover the indexes in this. Is this something that you could find useful? BHP, I was giving targets down to, as you can see, it's broken down on the monthly charts, but the major support is at $35.90. And the real breakdown is below $35. The breakdown is important, yet it hasn't shown signs that it's got below the important point. Should it break, expect $30.88, and should $28 break, expect $19.81. Now, hands up to the people who've heard me mention $20 in BHP and $30, and when was I mentioning it? I've been talking about BHP seeing those lower levels back since really, goodness, 2013, 2 years ago, 2013, 2000. Rowan says yes, 2 years ago. So I do keep consistent. There are some big targets there. Glenn says for as long as being a member. I have not been that bullish on BHP. Glenn's been a member for quite a while. He loves trading gold. Rio I haven't been as negative on. Anyway, that is the Australian Shares Report, and as you say, 3 times a week you've got 34 pages, you've got 20 stocks at least, and we cover them longer term and medium term so you know how to position yourself. And as a member you are warned, as a subscriber to this, it's only $197 a month, and at the moment for a special you've got $97 until the 30th of September. So if you go to the website, you can pick that up. And that's at the ades.com.au website, which is, I'll put in the link here for you. If you wanted to pick that up, I don't think that works. Okay, so let's move on. So that answers the banks. So really, I've covered quite a few concepts there. A lot of these came from guys like, this is Larry Williams, he traded $10,000 into 1.1 million, and in 1973 he made $1 million trading commodities. This is Jake Bernstein, and Larry we talked about previously, creator of Williams %R, and Jake Bernstein, one of the most prolific book writers. Andrew is asking, will CBA still eventually get towards $100? Yes, it can, Andrew, and there's targets on the downside which came out in the Australian Stock Report, the Australian Shares Report, sorry, and I've put the levels at which we'll get that support and then head back up. So I asked you before, how many of you are investors? Many of you are investors, and if you want to put your feet up and not rush around, the Australian Shares Report comes out at 4 o'clock in the afternoon, sometimes 3:30 in the afternoon, depending, and it's produced Monday, Wednesdays, and Fridays. It gives you a very good grounding as to what I'm thinking about the markets. A member called me up today and he said, no, I was very active. I was a very active trader before I became, before I got another job. I was a full-time trader. I was trading big volumes, and I use you to work out where the market's going because I used to have to do it all day myself. So you save me time, and I can actually work another job without having to do all the stuff that I used to do, and it saved you the time. So Australian Shares Report, as I say, at the moment, if you go into the website, you can pick that up for a saving of $100, and I will maintain that subscription price for you for as long as you're a member. If you wish to save some more money other than the $100, because the price will go up on the 1st of October, if you wish to save some more money, it's normally $1,997 for the year. It's only $997 for the year. Should you buy it now, it will come up, the price will rise on the 1st of October. If you are a self-managed super fund manager, this should be your Bible. I'm not just saying that for reasons of ego, because I look at some of my work, I go, wow, I do a lot of work for people, and believe me, if you are trying to do this by yourself, it's difficult. And one of the things that I do is I'm unbiased, and from what I was told by somebody who assessed me personality-wise, who was a personnel expert, he was a personnel specialist, he said, everything, you are much more consistent than I have seen anybody else in this business. So consistency is important in the markets. So, do you want a relaxed long-term perspective as an investor? Then get the Australian Shares Report. Okay. 3 times per week, major indices covered, so you know which. We do the property index, we do telecoms, we do health, we do gold. In fact, health was one of today was, and the last couple of days, last week, I've been saying the healthcare index is the strongest index that we have. We cover the banks, Rio BHP, we cover 20 to 30 shares per day. A long-term perspective, we have targets, timing and stops. And before the 30th of September, $97, saving $100 on its normal price. So, would you like some more complicated stuff? Anyone up for complicated stuff? Are there any hands going up? Okay. What I'd love you to do, I can give you complex. I can do that all day. If you're a beginner, keep it simple, please. The more complex you have, the more complex you can make it, the worse it can become for you. We make better choices when we're faced with simple choices. So I can do complex. Okay, so all right, Bernie, never one not to take an opportunity. I noticed that. NWT. Now NWT, I haven't looked at for a little while. A long-term target in NWT, NewSat. What can we tell about what's happened recently in NewSat? We see a climax low. However, it's failed to go up. Now, capitulation lows happen on high volume. Write that down. Capitulation happens on high volume. Has it made it above some important points? No, it hasn't. Do we expect another low, another go down? Yes, we do, towards 5 cents. So that's a longer term target for you there, Bernie, on the downside. At the moment, I would wait to get too bearish in the medium term. Below 20 cents, I start to get bearish. So at the moment, I could only give you a really decent target up towards 30 cents or 32 cents on NewSat. Notice here you've got this pattern which is good volume. It's broken up, but the volume on the downside has been increasing as well. Now, Andrew, what did I say a few months ago on Crown? Andrew's question is my medium-term view on Crown Resorts. Who remembers my view on Crown? Over here, it was up around about the $16 area, $17 area when I talked about it. I was looking for $12.86 to $13 on the downside. It's achieved one of my first targets at $14, but certainly more lower in Crown. Why? Notice the OBV is cutting back, if you want to use that, which I don't. Notice also that the volume is increasing and heavy on the downside. On the weekly charts, see, I can go back. I was looking for $13. We have $13 on the downside here. OBV not supportive, volume not supportive, trend and drift of the market down. Let's look on the daily charts. Falling out of bed. Did anyone take my warning about Crown and not go into it? Because certainly it's been as short as paradise. And the reason I gave, who remembers the reason I gave? Barangaroo requires a lot of capital as well. That's a lot of money. They've had to put a lot of money into the pockets of Brad Pitt. I think there's a couple of other people who I can't remember the names of who've been paid by Packer out of Crown's money, ridiculous sums of money to promote it. I think it was Robert De Niro, I think it was. It'll probably work in the long run, but certainly you want to be buying it, having a try between $13 and $14, $12.74, but I have not been a fan of Crown. Rowan saying Lee Nah. What does that mean? Sorry, I don't know what that means. Apologies. IPL. Again, at the moment, we have to assess the market on a bigger basis. Lena sponsors Crown for tennis. Okay. I didn't really. I did think of her as a tennis player, but I didn't twig between the sponsorship. Now let's have a look at IPL. Now this is another classic example of a very good trend, a very good downtrend, and then no recovery. So at this point I can't say anything much nice about IPL, and people have been hoping forever that IPL will supply itself with a life and come back up to $4.83. At the moment there's no sign of real life in there, a little bit of volume. I might think about it if it gets above $3.34, but I'm not that interested in that stock. It's just blown itself up, for want of a better word. If you picked it up at $2.59, I would think that's okay. You could buy some at with a stop at $2.50. Now David has asked, what is the potential for low for XJO? Now I have given that. I've given that in the Australian shares report, and really the bottom end of the range, 52.50. We started talking about there, down towards 52.50, into this zone. We've had that for a while. This is merely a bit of churning going on. It could go up to 54.68. More likely 54.27 before then, but the trend is down. Now FMG was the question. And FMG, you all know my view on the iron ore. I couldn't understand for the life of me. This is something we do all day, do each day for the Profit Owner Group. We look at the Chinese iron ore price. And up here, I don't know, I couldn't believe that I was seeing even my friends recommending buys in iron ore and it was going a lot higher. I couldn't believe that the new vice president of, or the new president of BHP was saying that up here that iron ore was going to 280, and I was totally flummoxed. I think when did he come in? It was over here at 138. I was thinking, this is just a retest, and we're going down towards. At that time, I was thinking about the high 90s. If my memory serves me, it wasn't quite this low, and it's progressed a lot further. The trend is down for iron ore, with a target at $70.17. So when you look at FMG, which is highly leveraged and has poor quality iron ore, I thought $3.60 was a target for Fortescue that made sense to me. We can see that it's been achieved. My first target on this downside, when it got up to $5, I said, oh, that was a correction. And we can see 360, in fact, it's gone further than the 360 area on the downside sometime this week. But it's heavy. $4, didn't like it above there. Still heavy on heavy volume, OBV not working well. The drift is down and the trend may well start soon. It has hit a target, and what I would say is if you were shorting this, your stop would be above 386 with a target at 320 if it can't get much above 375. That would be reasonable. Now, there are some strong buys, Andrew, and some of those are PHG trades. I don't think we'll have a time to go through them, but I wanted to talk about the. We'll have a talk. We've talked about the XJO, and really it needs to break through 5,000 to confirm that things are really bad. I've given some targets as well on that. Now, next one is MFJ or MFG, which I think is Magellan Financial. Now, we talked about 3 drives to a top. We could call this one 1. Right. This one here is what? Why does it do that? I never understand these computers that well. Sometimes they just want to stop with your mind. Here we go. No, let's do a new chart. Sometimes they just decide to play with your mind, but here we go. Go away. One, 2, 3. So at the moment we see a 4th wave, we see a possible 5th wave in the making, and another push to new highs around $15 would be, okay, Zoe is saying that Macquarie Bank gave a big buy for FMG on Sky Business Lunch Money program today. How often do they work very well for there? Do you often see brokers actually recommending a buy when a market is on a real low? I find that maybe I delete that mentally, but for me it's something that it's actually unusual. They normally are telling you to sell on low. So unless they've changed their story and the way they do things, then it will be unlikely that that will be a good successful point, particularly as the stock market, at least the iron ore market, is making lows a bit too far down. So really, it's a yeah. I don't know. Normally you don't see that working that well when brokers make recommendations on the lows. They tend to be better when they recommend up. So Wayne's saying usual good value BS. Macquarie Bank have a $42 target on BHP. So yeah. Yeah, I find that maybe it will get there eventually. It probably will, but that might be next year or the year after or the year after that. So Magellan, right now it hasn't broken down. It hasn't shown enough damage, and it is correcting this overall really big uptrend. You will notice that it hasn't made a new high for about 6 months, and you will also notice, though, it's losing its momentum pretty seriously. So while I think you've still got the opportunity to see it probably to $16, let's drop down a little bit, and certainly 15.32, and you would want to buy this if it broke above 13.21. Your stop would be at 12.10. You wouldn't be rushing out in a hurry. You could see it back down to $12, $11.99, that sort of area as well. So Magellan, if you buy it, don't expect it to shoot the lights out. So he says that's why we need someone like you and your reports to clear the noise. WPL's easy. We had some great runs on WPL, and we've been waiting for $40 to come back down there. That's Australian Shares Report. Where is it? I don't think I've got it up here. I took it down. That was a bit stupid. I probably should just take that up. And, here we go. Yeah, people often ask me questions, and I've already answered them at the start of the day. And let's pick it up. Okay. So this is WPL. See that $40 is still the important, because we've been calling that for a while. Stock is not super weak, and it's probably the reason why the index is staying up so well. What I don't understand is with the energies complex is that the energies prices in US dollar terms have been shot down. And basically, if you're long as an investor, 39.60, this is a place to pick it up down there. And we talk about that the volume is increasing as price decreases. So it's a little bit of a worry. It'd be down to $40. And we also have we can have a buy at 40.50 with tight stop loss, but generally I'd wait for that $40 area for that. Okay, I think we're getting there. Yeah. And tonight, for those people who want to work one-on-one with me, I do this rarely. I will be opening up the the Traders Green Room at the end of October for 2 places to work with me one-on-one for 6 months. I have been working each year with 1 or 2 traders only. It's not for everybody, it's expensive, but you get to work with me personally and I hold your hand as you trade as well. And if you're interested in that, you want to call 1300 552 182, and that's call tomorrow and have a chat. There are opportunities to become gold and silver members. Actually, silver members. Gold members I only choose from people who I know and who do an interview. If you are thinking of getting Profit Hunter Group, which is where we actually trade live, we have a constant membership interflow. Many of the members are professional traders, professional advisors, as well as self-managed super fund people who are more active. That would be something to consider. Let's go back, and I want to go back to where we were before and just come back into what we were. This is the way I can do this. Go back to what we were talking about before, and I'd like to wrap it up. We talked about 3 drives to a top. I've talked a little bit about divergence. We talked about trading with the trend. So what techniques do people use to trade with the trend? Now, there's a thing here which I rarely use called an MACD. And the MACD has some interesting characteristics. It shows you the trend of the market, but it also shows you when the market is diverging. Now, divergence trading is somewhat dangerous. When we looked at Magellan, and I want to specifically give this to you, when we looked at Magellan, we can see that another push to new highs would show divergence. When we drop down onto the weekly charts, we can see a push to new highs. This has been divergent. This high was divergent. This high was also divergent. So on the weekly time frame, we actually have one, two, 3 drives to a top. And we see divergence on this high. With this ADX, it's actually diverging 3 times. And how do I mean that? You'll see this top, new top, this top, new top. This indicator failed to make new highs. This one made a new high on that top. This high here was coupled with the indicator not making new highs. This high here was coupled with the indicator not making new highs. That is divergence. I'll get rid of some of these things on the chart here for the sake of good order. Remove all states. Okay, so let's look on another way of looking at things, which was MACD. Now, what the MACD is, ostensibly, it's the difference between 2 moving averages. And basically, when this is positive, the blue, which is the shorter period MACD signal line, is above the moving average, the average of those, the moving average convergence. I won't go into the explanation because it does my head in as well. We can see that this top also showed divergence, but when this is above each other, you've got a trend. When the blue is above the red, you've got a trend, basically. Or, more clearly, when you've got the histogram above 0, which is just the representation on a histogram basis of the difference between the blue and the red line, you're in an uptrend, or at least you're in a movement. And when it's making new highs, new highs, new highs, it's separating, you've got an uptrend. Here's an uptrend, and here, when it's below 0 and going down, it's a downtrend. So the moving average convergence, divergence seems like a really good tool for getting the best of both worlds. One of the problems is with it is when it comes into a range, you get this, comes into a range and it looks like a downtrend, but it's not. All it is a correction. Coming down here, it looks like a downtrend on the MACD, but it's just a range, A, B, C. So Magellan still has the potential to go higher on the longer term time frame. On the shorter term time frame, it's going nowhere. On the medium term time frame, it might, on a breakdown below $12, probably $11.80, see a decent pullback. What you've just seen may be unusual, I think, in different time frames. And depending on where you're trading, you need to focus on the time frame above you for getting in with the time frame that you're trading with, or want to trade in, and staying with that trend. And on the shorter time frame, you look for entries to go with it on the time frame that you want to trade. So MACD is a deceptive little puppy. Let's look at divergence on this scale. And I think we might wrap it up soon because I'm getting a bit tired. I'm sure I don't want to bore you guys too much. On the divergence, we see on an RSI, which is an indicator that varies between 0 and 100, and I won't put on anything. We can see on the weekly chart here that a new high was made over there at this point. Notice the new high where that red line is, and not a new high on the RSI, but a new high on the price, not a new high, and there, not a new high. Divergences also can last a long time, and they can send you broke. So you have to be very careful when you trade them. Notice over here, we see another new high, divergence. I'll draw this in for you. So we have new high here, not a new high here, not a new high on the RSI, not a new high on the RSI, divergence here, and yet each time it only gets a decent small pull forward. So what Lorraine is asking, what time frame should you concentrate on mostly? Well, first off, Lorraine, can I ask you a couple of questions? Are you trading full-time only looking at the screen? I'll ask a more open question. What else do you do with your time? Are you working? Okay, so Lorraine, you're working. So your time frame should be a weekly time frame. Because if you're working, you probably make your best decisions on the weekend when you've got a clean, fresh mind, you're not working, there's not pressures, you can sit down and concentrate on the market. So you should be looking on the weekly time frame and using the monthlies as your guiding roadmap. If you said to me, well, I work part-time or I want to trade full-time, then you can go down to the daily charts and then the hourly charts and concentrate in there and use your trading for income. But at the moment you've got a job which covers your income, so you're looking for longer time movements, longer term time frame movements to grow your wealth. So number one, I'd be saying weekly charts, because the more you look at these charts, the more you can confuse yourself if you do not have your methods down. I will Should you look back as far as quarterly and yearly? I do that. I do that a lot. Recently, last month I've been listed in a soybean contract. So this is for my commodities. How many people here are commodities traders? Raise your hands if you're a commodity trader, or give me an idea. Now, Gary, who is an owner of a grain company, is on and is a PhD member. And I got an email from Gary yesterday, and his email, where is that email? I might just pull that up. He said, bang on, you got it bang on. I had been waiting for $9.31 since about here, when it was $11.64 as a big target at $9.31. Yesterday I get this email, hey bang, I hadn't seen I had an order sitting there to buy some soybeans down there, and hey presto, you can see here the low was $9.31 yesterday. Let's look at this again. I don't know if I've got your email. Oh, did you put it on the, where is it? There we go. We did a big talk about that, because his major interest is grains, not necessarily soybeans, but he likes to trade it. Where are we? It doesn't have it here. Anyway, I was on the post. Okay, I'll show you that on the post. Yeah, thanks, Gary. Sometimes I get, there's a lot of different ways members communicate with me, and I prefer it over the ZX. Yes, okay. Posts. There we go. Okay. Okay, that's the stop. Yeah, no, it's a different one, Gary. Anyway, I got this nice email from him saying, "Hey, bang, it's hit," and he already knew it. But by the time we talked about it, it had already was back up to $9, and yeah, here it was got filled down here. By the time we're talking about it, it had rallied back up to over $9.40. Now, Lorraine is asking another question. Could you touch on the percentage of each trade relevant to total capital? In other words, 1 or 2% of capital. Some say 2% is too high. Now, Lorraine, the people that tell you that are not actually often in the stock market. Most of the time, they're actually talking about leverage products like futures. Now, in futures, a 2% risk is appropriate. In shares, if you are risking 2% on your capital, that's pretty good if you're trading CFDs on shares. Sometimes, for face value reasons, you actually don't get much bang for your buck, and some people risk 5%, up to 5%. Now, what Russell Sands of the Turtles, who was taught by Richard Dennis, I don't know if I've got the Market Wizards book here. I might actually just take a quick wander down the road and grab it so I can show you the book. Apologies, I can't see it quickly, and you probably can't hear me. but my library is pretty big. Anyway, when the best traders, the best teacher I've had on money management and how to position size and all that sort of stuff. Oh, here's what Gary said. Yeah. Okay. Thanks, mate. You probably can't read this. That's the problem with these things. Yeah, okay. I'll see if I can do a print screen. This is the book. This is the book by the gentleman who was over trading. This is a book by Curtis Faith. He made a lot of money. He was one of the original turtles. Russell Sands used to trade with him. This was a young guy who followed their methods that was taught by Richard Dennis and Bill Eckhart, and Russell followed the methods. But Curtis was very young when he did it. When he was, I think he was 18 or 19. And he followed their way of doing things, and he was over-trading. They lucked into some good trades and did very, very well. The turtles taught money management, and Russell said basically, Curtis didn't know anything. He just walked in and did it because that's what he's told. He had no fear being 18 or 19 years old. So what I would say to you is as follows. 2% is not too much if you are trading shares. If you have $3-4 million in your account, then trade 1% because you will have lots of different trades and you'll probably do pretty well because you won't be scared on any one of those trades. I wouldn't be fearful about 2% risk. If you're trading a $10,000 account, then what I advise people to do is actually trade foreign exchange, not with the aggressive leverage, but because what you can do with a foreign exchange account is you can trade small parcels. Some FX providers give you leverage of 400 to 1, 200 to 1. Don't do that. Only trade leverage of 30 or even 20 to 1. And if you trade that $10,000, you can actually manage that into smaller parcels and trade it that way. Maria was asking, can you comment on the best way to trade very small accounts? And the best way to trade very small accounts is very carefully because you don't have much in it. What I say to people who are trading very small accounts is the best deal is to go and get a job somewhere, earn money the way that you know how to do best, get it, and then build it up so that it's actually worthwhile. Because say you make 100% return on an $8,000 or $10,000 account, it's good for learning, but it isn't going to help you feed the family or feed yourself for a year on an $8,000 account. So it's better to have more money. More money is always better. Now, Gary's just come up and shown me this his email, and thanks, Gary. I appreciate that. I have some pretty amazing people in my PhD group, and yeah, they're pretty smart people. They really are smart people. Some of them are really. Everyone's a joy to have, actually. They really are. And generous too. Generous people. Here we go. This is the quote. And it's like, I was really pleased to see this, especially because I'd been promising that soybeans would be not in the teens anymore. And that is, forgive me while you're probably, I'm looking in the corner here. There he is. Yeah, it was nice. I think you can see that now. Hit on the dot. It was actually at $9.31 the target. So it banged right at $9.31 from a couple of months before. So far, as you can see, it's starting up a bit. It's not really fallen out of bed. I would like to see it clear through right now, $9. Actually, I might have just gone long in another position. Actually, I go long in another position on a break above 942. We do have some targets, and I'm sorry for people who don't trade commodities. We do have some targets towards 947, 957, and as you can see, this downtrend had been going on for quite some time, and this is the daily charts. You can see that it's banged right into the level, and it's come down from being, up around the 15 mark, so it's down big time. Aussie dollar. I am doing the Forex webinar tomorrow night on the forecasting webinar, and Aussie dollar, I must say, I do think, as I said yesterday, we probably get down to 86.5 cents. At the moment, it's trying to hold on, but the Kiwi's getting knocked around too, so maybe 86.5 cents. Now, the best way to trade a small account, Maria, if you don't want to make more money somewhere else, and really I advise you to do that, it's better to play with money that you've got a reasonable amount of money with, so it makes sense that you're doing it. But if you are going to do it, then trade smaller positions and buy some shares. Shares are okay. You can have 5 lots of $2,000 positions and work with them and learn with that way, or do the futures. Now, QQQ is asking whether the big wave 3 is over. Let's go in and have a look at the Profit Hunter Group PHG trade. This is the Profit Hunter Group PHG trades, the ones that I recommend, that is in the indices. We'll just look up those. Okay, so over here, I'll blow it up a bit so you can see it. These are the ones that my members get every day for the positions. And we're short now from the 22nd of September on a break of 40.76. Stop losses moved down to 40.42. Target was 40.07. Let's look at where that is. So I'll just clean this up for PHG members. Where are we? So here we've just taken profit on that. We still have 40.07 on the downside, and it's just a bit messy. What Wayne's asked is the big wave 3 over? And I might counter that with telling you, is that a wave 3 or is this A, B, C with a target at 43.46? So when you look at this a higher time frame, Wayne, that's not really a wave 3, is it? What I'd love to see it break back down to 34.97. Now we made a little bit of money on that PHG trade, and it's been nice to have a go at it, but it's now taken out. We haven't another look at that. The DAX we sold on a break of 97.51, and we've got a little bit around break even, if I remember correctly. What's it done tonight? We're still, it's 96.03. We got short over here, so we're up a fair bit on that. But 95.13 was the target area there for that one. Volatility index, we've been buying that It's okay. Okay, so that's the PHG trade. So that answers your question there, Wayne. I think I will leave it at that. If you, again, I would certainly counsel you to, if you're a beginner, get the Australian Shares Report and ease into it. Take your time. If you're a person who trades longer term, this is a worthwhile report, and gives you the targets, the stop losses, and the timing of the market. And it also gets my timing, 197 per month or 97 per month if you get in before the 30th of September. I have sent you that link. I want you to trade with the trend. This is important for me. Trade with the trend and keep, if you can, keep on it. If you do get on it, keep on it. Watch those 3 drives and triple divergences. The price indicators can mislead you a bit, and I'd like you to pay attention to pattern. If you don't know anything about what a trend is, whether it's going up or down, I want you to look at the moving averages, or just look at the market saying it's going up or down. Get your kid, probably better at a kid below 10, and you say, is the trend up or down? Has the market been going up or down? The kid will say, it's going up, Daddy, or it's going down, Daddy, or Mummy. Why are you selling it when it's going up? He will say, because the kids don't have that stuff in their head that we've learned, all that different emotions that we've had over the years of being wrong or whatever. They just do what they do. Kids, that's the good thing about kids. They don't have that fear, like a bit like Curtis Faith. So my conclusion, trade with the trend, watch volume. We talked about volume. We talked about some indicators. The indicator I like is ADX. I've done some webinars on that. I'd like to thank you all for coming along and wish you all the best. On your special, does one sign up for a year? Lorraine, you can sign up for a year at $997, which saves you $1,000 over the normal yearly price as of the 1st of October. And also, if you sign up for the monthlies, it's $97. So effectively, if you get the yearly report, sign up for the year, you're saving 2 months. You're getting 12 months for the price of 10 months. Yes, all prices include GST on that side order at the same time. Burning. Okay. Thanks everyone. Hope it's been useful. I will see you probably next webinar, and I encourage you to give a go at the Australian Shares Report. Thanks, Lorraine. Have fun. Thanks, Maria. Mara. See ya.